In the currency quadrant, taking a look at the March Japanese yen, which is going through a Friday reversal. The yen had a big drop today after two consecutive sessions higher on Wednesday and Thursday as we head into the weekend. Now, looking at a weekly chart, the Japanese yen finished up just over 1%, and it is the second positive week in the last three after suffering through four straight down weeks and 11 of 13 weeks of lower prices. The high today, 64.95, was only up 20 basis points or 0.2%, and the low, 64.37, was down 69 basis points, a little more than 2/3%, a little less than 0.7%. And as we come into the New York close, we're still down over 0.5%. Rate hike talk is circulating. Reports are circulating that the Bank of Japan will hike rates on at their Thursday meeting, according to a story by Nikkei, which is the Japanese economic news organization, that was also picked up by Bloomberg and others. According to the story in the Nikkei, the majority of the Bank of Japan Policy Board is likely to favor an additional rate hike, raising the policy rate to 0.5%, which would be a 17-year high, and that could be part of the reason that the week finished positive and that we've had such a strong week in the Japanese yen. But there is quite a bit of economic data being released before the Bank of Japan rate meeting, including trade balance figures, industrial production, and national headline CPI and national core CPI. Now, it's unclear whether this will have any effect on a potential rate hike that the media seems convinced the Bank of Japan is planning on doing on Thursday. But if they don't, and we had weak data, you could look to that as the reason why they did not raise rates.